You ran numbers again. Thank you, Danny, as always. What do we got for us? Lay it on me.
All right. So things continued to cool off as we got into December. Not a big surprise. We dropped, you can see on the chart there, total sales down to just over 1,600. Not that far off from last year and not that far off from last month. Down about 9%, both month over month and year over year. Right now, there's a little over 2,000 active listings, so that looks like 1.3 months of supply, which is a little bit more than what we've had recently. But that's just because, we're looking at the prior month's consumption, which is down a bit. Not surprising, again, because it was a holiday month. You've got December in there, Christmas and all that. So, yeah, I mean, I think this is pretty normal. And what we'd expect is a similar pattern to what you see on the left-hand side of the chart, which is January will probably be low, February low, and then things really start to pick back up in March.
Gotcha. And I know we're down year over year, but that's probably more product. That's the total number of homes sold, not the average. The next data set you gave us here is the average, list price versus sold price. And that is down off of where it was. Actually, we're up from last month, aren't we?
Yeah, so up just a little bit from last month. Really, the big thing here is you can see that showing both the list price and the sold price is important because it shows where the buyers are, right? You've got people that are buying homes for under list price right now. You see the line crossed over. We talk about that every month. So yeah, it's a reflection, we think, in our market of less competition for the houses that are out there. So you get into less bidding wars. Things sit for longer before they go, which leads to more price reductions. And all that contributes to the average sale price going under the average list price. And that's what we're seeing here. But the really notable thing is you can see all the way over on the left-hand side, this year compared to last year, this December compared to last December, average sales price is up still $30,000. So even though we're down from the summertime highs, we're still up year over year.
Yeah, and those two charts go together. We can't stress it enough. The less homes are up for sale, the higher the prices are going to be. That's just how it is. There's still demand here in Central Ohio because we're affordable and we're nice. We're a nice place to be, right? A lot more. We're selling in December under asking with the donut real quick, but I think that's pretty much as expected, right? 7% sold for over 5%.
Yeah, and this is probably the lowest we've seen that for the last couple of years. But again, a reflection of the level of competition that's in the marketplace right now. We expect that that's going to rebound. We'll talk about interest rates in a little bit, but just like you said, it's a growing market. We still have a lot of jobs coming in, a lot of people moving in compared to the national, home prices. Columbus is still a very affordable place. At any rate, yeah. So below asking, same kind of dynamic as what you see on the days on market, where things have gone up, pretty significantly to an average of 28 days on market. The median's 13 days. But if you scroll back across to the left and see where we were last December, I mean, that's almost the same, right? So I guess we'd anticipate similar pattern, as things start to wake up into the spring.
Yeah, and the consistency of this market shift is what gets me. December and January are traditionally for sellers, the worst months to sell your house. If you have to move, you have to move. That's how it goes. But if you were able to wait for the summertime bump, there's a real value add there. However, if you do have to move, we get that, and you're still doing better than you were any point in the past. So, or in the past year.
Yeah, and if you're looking to buy, I mean, this is a good time, right?
It's the best time to buy, right? For sure.
You look at the last several charts, and the prices are in your favor, and the level of competition's in your favor. So that's all really good. Go ahead.
And I know I'm skipping out of order here with charts, but we're a more than a full point interest rate point below where we were in October. That's a big deal, and that's going to start to turn up 2024, I believe. And I think that sentiment is shared with everyone. So, if you're looking to make a move this year, if it's making sense, it's actually way better to do it now while things are slow, while inventory is slow, versus getting out there in June. You will see a rate drop, but so will everyone else, and everyone will get off the shelf, get off the sidelines, and you'll see a lot more competition. I'm going to guess between now and June, because of that drive and competition, just a loose guess, on average, I bet we're going to get 6% jump in pricing. So for sellers, that's great. Again, like we were saying, if you can wait for the busy months, wait. If you're a buyer, if you can do it now, because it's going to cost you more later. Even though it's a lower interest rate, you can still get that interest rate if you buy now. You just get it later. So through a refi. So there's big advantage to that.
Yeah, because a lot of times we tend to think of, I'm going to wait for the rate to come down. But we kind of assume that the price is static. And what we see here is that is totally not the case. There's a lot of pent up demand. There's not been enough supply. As soon as things become more affordable, whoosh, there's a big rush back in. And now that means competition. Now that means multiple bids, best and highest, and all the rest of it. That does drive prices up. And you can't refinance the amount that you borrowed. You can refinance the rate. And that's the real trade-off. So as we think about waiting for rates to come down, we have to keep in mind that the prices, at least in our market, are going to continue to go up.
Yeah. Yep. Average days in the market, it's following the trend from the previous year around this time. That's all the same. I love that you're actually pulling our numbers, not national averages, not, all of Ohio or irrelevant numbers to us. We're pretty consistent here in Central Ohio, and that's been showing over the course of these charts, over the course of the last couple of years of real tracking. I don't know anybody else that does that, so thanks for doing that, man. We'll keep checking it out, but get ready to gear up for a really busy 24. Just fair warning, we'll say it that way.